Oil prices have fallen for a fourth day, and they are now set for the longest losing run in more than a year. And a weaker global demand outlook has depressed the market. Both OPEC and the U.S. Energy Department have cut their demand outlooks. OPEC on Wednesday cut its outlook for demand growth this year by between 460,000 barrels per day and 2.64 million barrels per day, citing the resurgence of China's COVID-19 containment measures and high inflation. Last week, together with allies including Russia, OPEC sent prices rising when it agreed to cut supply by 2 million barrels per day. The energy market is under pressure as well from the dollar, which has rallied broadly, including against low-yielding currencies like the yen. For more on this now, let's go to Craig Erlam, who is a senior market analyst at OANDA. Craig, many thanks for being with us today. So first of all, many variables, really many forces at play in oil markets. Looking ahead, what is your outlook for the oil prices, for crude prices and the trajectory?
Well, I think it's so difficult right now because it's one thing trying to anticipate how OPEC Plus are going to respond. And we've seen over the past 3 months that they are to a large extent unpredictable. We had the 100,000 barrel increase followed by a 100,000 barrel decrease and then a 2 million barrel cut, which no one saw coming 2 weeks before that event. So there is an air of unpredictability about OPEC Plus as a whole, but that's not nearly as unpredictable as the actual global economic outlook and therefore the demand outlook for crude. So this is changing basically by the day. I think what has become clear over the course of the last few months is that OPEC Plus has a price region in mind that indicates that the market is broadly balanced. And that seems to be between $90 and $100 a barrel. So if we move too far below that level, then I think we will see further output cuts from OPEC Plus because we will see new demand growth forecasts and they will believe that the market believes demand growth is waning. Whether we see the similar type of reaction if prices move too far above $100 a barrel is hard to say because we saw at times this year when oil was trading around $120, $130 a barrel, OPEC Plus didn't really see the urgency to ramp up output too considerably. So I think the sweet point is $90 to $100 a barrel for the foreseeable future, but ultimately that just depends on whether the alliance agrees with the IEA, the EIA, and other forecasters around the world.
Right, interesting. So around $90, $92 a barrel, really. And we've seen a high inflation, but also the dollar really impacting this oil market. The dollar hit a 20-year high. Do you think this currency has more room to grow before the end of the year? And in case it were to happen, I mean, what would be the impact?
Well, if we look at past periods of global economic instability, and we're certainly very much in the midst of that and nowhere near through it at this point in time, the dollar has always been favoured. It's a safe haven currency. It's where traders feel reassured. And we've seen that now over the course of this year. It's performed extraordinarily well. We are now moving from, or will soon move from the interest rate and inflation period where there's enormous uncertainty over how high both of these will go into the recessionary period when the global economy will suffer the consequences of the former two. And I think the dollar is going to continue to be favoured. Now, I don't think we're going to see it soaring to the levels that it has been over the course of the last 6 to 8 months, but that doesn't mean it won't be well supported during that time. So I think for the months ahead, I do think the dollar is going to remain well supported, which will, to an extent, limit the movements that we do see in oil prices, but that doesn't really help most countries around the world because they do not use the dollar. And therefore, when you're seeing your own currency weaken against the dollar, then the de facto result is that oil and energy prices are becoming more expensive. So I think the best outcome at this point will be that the dollar stabilizes around these higher levels, which is broadly, I think, what I expect to see. And hopefully we can start to see energy prices or more broadly commodity prices starting to soften as the economic outlook starts to wane.
Dollar stabilizing. Craig Erlam, many thanks for this update.